Hey, I'm Anthony Vicino, and you're listening to the Passive Investor Podcast.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey, PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, ladies and gentlemen. This is the Passive Investor Show. I'm your host, John Fortes. I have the great Anthony Vicino. Anthony is the best-selling author, investor, and entrepreneur committed to helping people realize their return on life. He is also the co-founding partner of Invictus Capital, a multifamily acquisition firm based in Minneapolis with $15 million in assets under management that provides busy working professionals with the opportunity to invest better. As the host of the Multifamily Investing Made Simple podcast and author of the Passive Investing Made Simple, Anthony firmly believes investing shouldn't be complicated, scary, or overwhelming. Perfect, because we're talking to investors here. Mm-hmm. So Anthony, welcome to the show. Thank you.
Thanks, John. I appreciate it, man. I'm really psyched to be here.
For anybody that doesn't know, me and Anthony met a while back. We're part of the same communities. And this has been a long time coming because we've been trying to get this scheduled for quite some time, man. So I really appreciate you.
We've been playing tag, back and forth for a long time.
Yeah. Anybody that has a calendar, it's a schedule and tag. So,
yep.
That's what it is. Anthony, tell us how you got here. How'd you get into investing?
I got into investing. I think you got to go back to, coming out of college. I have severe ADHD. So coming out of school, I had all these degrees, but I didn't know what I was going to use them for. And I certainly didn't think I was ever going to use them in a corporate environment. So I always knew I'm a really bad employee. I was getting fired all the time. So I knew I needed to kind of go find my own path in life and be my own boss, have time freedom, and all these things that we talk about when it comes to financial freedom. But at that point in my life, I wasn't really caring so much about the finance. I just wanted to be free. So I went and I was a professional rock climber for a good decade. And then I started writing science fiction and fantasy novels, and those did pretty good. And then my foray with real estate really started when a buddy came to me one day and he said, "Hey, let's build a window washing company." And that seems like a weird intro into real estate, but what it did was the entrepreneurial bug bit. I was like, wow, building businesses is really fun. And from there, I built a bunch of different types of businesses, and real estate just eventually fell into the fold. And it was interesting because the universe it felt like multiple times in my life, the universe was like, hey, you should invest in real estate. You should get into real estate. Because I was in college, I had a roommate who was doing fix and flips, and I would help out. And all I learned from that was I'm really bad at construction. I can't do fix and flips. That's what I thought real estate was. And then couple years later, a buddy comes to me and he's like, hey, let's buy quads together. And I was like, that doesn't sound fun either. So I gave him some money. I did some passive investing, but it wasn't until like the third time the universe threw it in front of me, which is like 2016. And I don't remember exactly what the moment was, but what I tell people the moment is I was driving into downtown Minneapolis, looked at the skyline and thought, who owns all these buildings? Like, you know, that moment, like you probably had it too. The first time you thought like, who actually owns all of these apartment buildings, these skyscrapers, who is that? And so like digging into that led me down the rabbit hole of multifamily investing and how like people just like you and me, we own these things. And we do it like partnering our time, our resources, our capital with other people just like us. And so like that got me super excited because it's just so simple and accessible. I liken it to Legos. They only click together in so many ways. Once you understand that, you can build anything with it. And so it's my favorite business type because it is so simple and straightforward. And that's where I'm at right now.
As much as I want to go back into the rock climbing and all that, I mean, I think that's fascinating. You got to have a lot of upper body strength for that. So let's just fast forward, right? So you start getting into multifamily. When did you start working with passive investors?
You know, that took a couple of years. So here's the thing is like I said, when I was young, I cared about freedom, but I wasn't making a lot of money. Like being a climber doesn't pay well. Like it's not on ESPN. It's not this big sport. Then there's not a ton of sponsors. And so I was poor. I had no money and that was okay for me. But, you know, I look at a dollar and it means a lot more to me, I think, than for a lot of people who didn't struggle financially. So I really wanted to be certain that I understood exactly what I was doing when it came to operating assets. I wanted to do it on my own dime first. So I went and for the first 6 or 7 assets, we just used our own money. And then we started partnering with friends and family as like joint venture, like kept it really close to home. And it wasn't until we really had confidence that we could look an investor in the eye, somebody that we were just meeting for the first time and say, hey, that 50,000, that 200,000, whatever you're trusting us with, it's sacred. And we believe that, and we're going to do our best to honor that. And here's how we're going to do that. We have this track record. We have these systems in place so that we can do right by you. And I think syndication's like really sexy these days. Like it's for a lot of people, it's like, oh, I can get in here. I can make a ton of money without any of my own money. That's great. Well, you really got to take your lumps. I think you got to pay. You got to go through the school of hard knocks on your own dime first before you start taking people's money. That's just kind of like my stance on it. But it took us a while to get to that point. And so we opened Invictus Capital in 2019. And that's when we started our first syndication. And since then, I think we're in the middle of our 5th one right now. And we love syndication. We're not purely syndicators. We also love joint ventures, and we still like buying stuff with our own money. And so it's just another tool in the toolbox.
No, I love that. I mean, a couple things, right? So using your own funds, basically proof of concept, getting your own lumps, that resonates huge with me because my first deal was a 62. We joint ventured. We learned a lot. Recently just exited and we broke even. Well, a deal that should have been a home run. We learned so much that it's insane that, well, personally, I'm looking forward to the next one because of what I've learned on that one. And I'm glad I didn't lose money. So got my lumps, right? Resonate with you there. Now, when you start working with people, what kind of systems and processes did you have to implement? Because me as an investor, I want to know what's your onboarding process.
Yeah. So like one of the things that's unique about us is that we're vertically integrated. And so we have our own property management company in-house. And so we have our employees, we have our systems there because at the end of the day, we believe whoever's closest to the consumer wins. And our consumer is our residents and it's our investors. And we like to be as accountable to them as possible. So we like to control as many points of the equation as possible. So we don't love outsourcing the capital raising. We don't love outsourcing property management. Like we want to control these things because at the end of the day, when we control them, we know we can hold ourselves accountable to them to a higher degree. So that at the beginning of this, like it meant that growing was slower. Because when you can outsource things to like a professional third-party company, and there's nothing wrong with that, it's just understanding your personality. And for us, we're control freaks, and that's just what it is. But you could scale faster if you were utilizing property management companies or capital raising partners, and that's all great. But for us, that wasn't the right path for us. And so it was slower. And that meant that we had to onboard and bring on employees sooner than we were ready. Because there's only two times that you can hire. You're hiring either too soon or too late. Like it's never perfectly on time. And so we knew that going in, like we're going to build a property management company. It's going to be a little bit sooner than we're ready for, but that's okay because we're going to, at some point, it's going to be the right path for us. And so that's one aspect of it. For our investors, then what that really means is when they come in and they're dealing with us, they're dealing with us. First of all, like there is no intermediary between them and us. If they want to know how operations are going or how tenant collections or any of that stuff, they can call us up and they can get that information. And so we like that because one of our core values at Invictus is we own everything we do. And that means like extreme accountability, but it also means like showing up every single day and like being accessible. And I think when we're talking about like these investment amounts, they're big. Like I love passive investing, but if you want to get into them, it's usually like a $50,000 investment minimum. And so that's a lot of money. And I feel like you should expect like a higher degree of, I would say like white glove service or accessibility to the operators. And that's something that we really try to own.
Yeah, that's awesome. I love how you guys are vertically integrated. Now, you guys are more local to your area as well, and that's why you guys are staying local.
That's exactly right. Yeah. And so we only invest in the Twin Cities. It's our backyard. We know it like the back of our hand, and we're fortunate because it's a great market. But again, like you have to recognize your personality and your context. If you live in a place where you can't invest in your backyard, you're going to need to partner with third-party management companies, all that. It's like, that's okay. But for us, like this is our roots.
What kind of impact has the investment opportunities had on your passive investors?
Well, that's the really cool thing, right? Like, so for me, the big reason for like even going the passive investing route and like even opening that up to other investors was I looked at my life and saw like the thing that stressed me out the most when I was younger was money, like not knowing like where to invest or put my money or like how to grow it, any of that stuff. And I have 8 brothers and sisters and I look at them and they don't know what they're doing with money. And so it's like, let's create a better investing opportunity for people so that they can have their money working harder for them. They can get all the benefits of real estate without having to do some of the things that make real estate kind of suck, like dealing with tenants that are becoming belligerent or dealing with broken toilets in the middle of the night. Like, and so that's really what we're trying to do is like give people the opportunity to invest better so that they don't have to worry about the finances as much. And it leaves them then to be like more mentally clear to go and tackle the problems in their life that mean the most to them without worrying about like, ooh, am I going to have enough for retirement? Am I investing right? Is this stupid? And one of our biggest things is understanding how to passively invest in these vehicles is relatively simple, right? Like it's not rocket science. If you just spend a little bit of time learning, it's not overwhelming. It's not super complicated. You can do this. And then you're empowered with that knowledge to move forward always. And that's a much better place to start from than I think a lot of people when they are investing in 401k or the stock market, it feels so scary that they don't even bother to try and learn it. And they say, take my money, just go. I don't think that's a good investment strategy.
We interrupt this broadcast to bring you this special message.
Hey everyone, if you manage your own rental properties, aren't you looking for a more sufficient way to streamline your to-do list and make the leasing process easier? Apartments.com lets you list your units, screen and receive applications, create leases, collect rent, and track maintenance and expenses, all on the #1 rental network for free. That's right, for free. Apartments.com isn't just for apartments. 29 million monthly visitors visit the site for all types of listings like single-family homes, duplexes, condos, and townhomes. Renters view these specific listings over 100 million times per month. This valuable exposure and a robust suite of resources are available to you as a landlord for free. And it's all online, so you can access this information anywhere at any time. If you're ready to find the perfect tenant, get started today by listing your units on the #1 rental network. go to apartments.com/John Fortes. That's apartments.com/John Fortes. Why not take advantage of the free tools right at our fingertips? Go to apartments.com/John Fortes. It's free. So looking at your business today and what you did in the past, what's one thing you wish you did differently that would have propelled your business faster?
That's always a hard one. I think we've grown really quickly. And so I don't know if I would want us to have grown even quicker, but what I would say is what would have made it easier in the beginning or less stressful is partnering sooner. And, when I partnered with Dan Kruger, my now partner, like things just got so much easier. His strengths complement my weaknesses and vice versa. And so that it's hard to even like overstate the power of that. But the problem is partnerships, they're not just something that's raining from the sky. The right one takes time to find. It's just like finding a life partner. It's not something you can just walk into a bar and say, who wants to get hitched, right? Like it doesn't work like that. And that was a mistake I made on my very first real estate deal. I tried to partner with my best friend and we got to closing, like the day before closing table. And I was like, we can't do this. This isn't going to work because it's going to blow up our friendship and we're going to lose a lot of money because we're not working well together. And so if I could turn back the clock, I would say partner sooner. But then again, like you can't rush some things.
Yeah. One of my golden rules is before I partner with anyone, I have to get to know them for the year. Mm-hmm. Right. So it basically takes me 9 months to a year to get familiar with you. So I definitely sympathize with that. I get that.
And that's really good actually. Like, because everybody can show up for a week or a day or a month or whatever, to show up consistently.
Especially after a conference.
Right, exactly. But to show up consistently for a year or 2 years, like, and if you're a passive investor out there, just know like, it's okay to like get on somebody's like radar and not have any intention to invest with them for like 2 or 3 years. That's okay. Just sit back and watch them, make sure that they're consistent and they do what they say. Like you can't rush these things.
Well, it does a couple of things. It helps me weed out who's a player and who isn't. And like, this is a long-term business and it's not like people are like coming into this with like a mindset of, I got startup money to build this business and I'm going to just start cultivating investors before I start cultivating investments. What kind of content or information are you giving me to trust you going forward to partner with you? And that's kind of how I look at it as we're building relationships. Now, some of those turn into friendships and that's even better. And I get that. Right. So, I mean, we'll leave it there and we'll park it there. I think we hit on a bunch of good points on that one. Anthony, real quick, what do you do differently from other sponsors that benefit passive investors?
That's a great question. I don't really know. Like we're kind of like head in the sand in some ways because we don't look a lot at what other people are doing. We just keep looking at what we can do better and trying to take the feedback from our investors. We try to be as transparent as possible and as accessible. So when somebody reaches out to us, we try to respond as quickly as possible so that you're not going a couple of days to get the answer to your question. If you need us, you get us. And so that's something that we really strive for. We really try to simplify systems as much for people so that they're just not confused. A lot of times, like investing, it can be scary, it can be confusing. There's a lot of lingo. And so we try to always put ourselves in the position of the beginner. Like a lot of our investors are not new, but we try to come from that position of like, okay, if a beginner feels comfortable and understands what's going on, then somebody experienced will as well. And so like, it's scary going to a party for the first time and not knowing anybody and not knowing what to expect. And so that's kind of what we try to adopt when it comes to our investors, is like trying to make this as comfortable as possible.
I'll also add, you guys are very local to your market and vertically integrated. I'll keep it there. And I think those are two good positives as well that separate you from other sponsors. So one piece of advice you would provide to the PI listeners.
Always understand how the person across from you is incentivized. What is the benefit to them for being there in that moment? Like be cognizant. Like right now, what's the benefit to me and John sitting here and having this conversation? Is it to try and sell you something? Is it try to educate you? Because that's like what, gets us hyped up. Like understand that that's important. And when it comes to dealing with operators and like understanding what is their incentive structure for working with you. And that's going to, if you always keep that at the front of your mind, whether you're dealing with real estate operators or financial advisors or stockbrokers, or just in general life, I think that'll do you well.
Hey, I think that's sound advice. And what we're trying to do right now on this show is try to teach you to build a better business. So that's exactly what I hope is coming across. So that's very sound advice. Now, Anthony, how can we stay in touch with you?
I'm everywhere on social media. So if you just go like LinkedIn, Instagram, Facebook, and type in Anthony Vicino, you'll find me. But we're over at invictusmultifamily.com. And we have a book coming out next month called Passive Investing Made Simple. And we are publishing that alongside Jake and Gina. It's a great community. And it's really just trying to fill that void for people. Like in this gap, there's not a ton of resources dedicated to exclusively passive investors. A lot of times it's like, hey, come learn how to be an active investor. And it's like, no, teach me how to be a passive investor. So if you want to go check that out, that comes out in August.
Well, funny you say that. Is all that come learn how to be an active investor, usually you become a passive investor. You see all the hard work that goes into it. This
isn't as easy as everybody said it would be.
My favorite question, and I can't let you leave without you answering this. What is the meaning behind your company name?
So Invictus, well, there's two things here. One is when Dan and I first formed, we actually were Veritas Capital. Veritas means truth. Turns out there was already another Veritas Capital, and they hit us with a cease and desist the same week we announced our formation. So we pivoted. Our second name was Invictus. Invictus means unbeaten, unbroken. And it's a fantastic poem. If you've ever heard that poem, which is, I'm the captain of my destiny, I'm the master of my fate. That poem is labeled Invictus. And for us, when I talk about one of our core values is we own everything that we do. We are the captains of our destiny and the masters of our fate.
Very, very beautiful and touching. I love it. And it's the reason why I ask. I need to know. All right. Anthony, thank you for stopping by today. We really enjoyed the conversation.
I appreciate it, man.
Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.